Banking, Housing, Urban Affairs Committee will come to order. Thank the witnesses for joining us. Senator Cassidy will join us in a moment. This hearing is a continuation of our efforts to enact long-term reauthorization of the flood insurance program, NFIP. The program's been extended 28 times since September 2017. The latest extension will expire March 8th of this year. We'll discuss local leaders' perspectives on the NFIP and the challenges and potential solutions to the risks that flooding poses to communities across the country. Local leaders are on the front lines of so many issues: transportation, housing, growing challenge of flooding. Each of these is a priority for this committee. These leaders know all too well flooding is the most common and costly natural disaster facing the country. It's devastating to families and businesses and communities in every state. That's one reason, one good reason that Mayor Patterson's with us from my state. The risk is increasing. Outdated flood maps, population growth in at-risk areas, land use patterns, overstretched infrastructure all play a role in whether people want to admit it or not. Climate change is only making it worse. It's making extreme weather events more frequent, less predictable, and probably more extreme all across the country. Just this month, streams overflowed in our colleague Senator Reed's home state of Rhode Island. Torrential rains poured through homes in San Diego neighborhoods, represented by Senator Butler on this committee. Flash floods have been threatening communities across Louisiana, which is well represented by two colleagues today in the room. Flooding isn't, and that's just this month, flooding isn't confined to communities on the coast or even major bodies of water. As we saw in 2022, the same mountains and streams that make our Appalachian towns in Ohio and elsewhere beautiful also make family homes and local economies vulnerable to flooding in an era of more extreme rainfall. Often the only available land for development in Appalachia is in or near floodplains. Disasters also often fall hardest on the families and communities that have fewer resources to prepare and respond to them, often because of where they live. Smaller rural communities often don't have easy access to resources to respond to the immediate effects of disasters, nor do they have access to the resources they need for long-term recovery and to prevent disasters in the first place. We need to ensure our families and communities can adapt and become more resilient, both to the flooding we face and to the increases we know are coming in the next several decades. Whenever possible, we want to help communities avoid extreme flooding altogether through pre-disaster flood mitigation, doing it better than we have. NFIP is critical to that effort. Unlike a private insurance company, NFIP does not just provide insurance. Its job is to prevent and minimize flood damage in the first place, not just help with a very expensive recovery. NFIP combats the overall threat of flooding through four related components. Flood insurance, currently covering nearly 4.7 million homes and businesses, floodplain management, floodplain mapping, and mitigation. We must reauthorize and strengthen NFIP and invest in mitigation and floodplain management before disasters happen in communities. Recent hearings, we heard from a wide range of stakeholders who discussed the need for a long-term reauthorization to help communities and stakeholders plan, the importance of helping communities and property owners understand their risk by both improving mapping and other risk communications and through disclosure of flood hazards to prospective owners and tenants. And third, the importance of building state and local capacity to carry out our floodplain management and mitigation programs, especially for rural communities and small communities. We've heard FEMA's recommendations for strengthening the program, including forgiving the overhang of debt from previous disasters and providing means-tested assistance to help more families afford insurance. I'm interested in hearing today's witnesses' recommendations on how we can help strengthen NFIP so that it can help local communities meet these needs. I'm pleased to welcome Mayor Steve Patterson of the City of Athens, Ohio, and Southeast Ohio, to welcome here today to discuss some of the unique challenges faced by cities and towns in Appalachia. NFIP is a complex program with multiple goals and implications for many of the things people care about most: their homes, their communities, often their small businesses. I believe it's possible for us to come together to reauthorize and improve this program. Today's hearings will help inform this effort. And this committee, while sometimes partisan, often Senator Scott and I can work together on major pieces of legislation, as we have, from fentanyl to holding banks accountable to banking medicinal marijuana money and the like. This committee, particularly on flood insurance, is more regional in outlook perhaps than partisan, and that should help us someday, sooner rather than later, I hope, come to some agreement on NFIP.
So,
Ranking Member Scott.
thank you, Mr. Chairman. Before we get started, I'd like to take the time to welcome Charleston native Mr. Kanuski as a witness today. I can't think of a more helpful perspective in dissecting the issues that are really local in perspective. Although you now live in Minnesota, I've never met someone who left Charleston, actually, full time. Please come home soon. We really need you back. We need all the smart thinking individuals back in Charleston, South Carolina. But we thank you for being here today. The National Flood Insurance Program comes into play when we start thinking about how to mitigate the risks that are so impactful and negative to communities across the country. As we consider potential reforms to the NFIP, we must keep in mind local perspectives and not just those from Washington bureaucrats. Because we all know that the most effective policy making typically happens closer to the problem, not farther away from that problem. So our federal programs should foster local innovative solutions, not regulatory red tape. Y'all have heard me say this before, that as a lifelong Charlestonian and South Carolina resident, as well as an insurance professional for more than 20 years, having sold flood insurance policies, it's really important for us to understand and appreciate the devastation caused by flooding. There's no doubt that if you're a Charlestonian and you were around in 1989, Hurricane Hugo devastated our community in ways that very few natural disasters have before, and frankly, since. The storm surge was so bad and so high that it literally left boats in the middle of downtown in the streets of Charleston. More recently, Hurricanes Matthew as well as Florence devastated towns throughout my state and left some towns submerged. As a matter of fact, the town of Nichols, South Carolina, a very small town, was hit by both storms so bad that more than half of the houses in that small community found themselves underwater. And the devastation of trying to rebuild 24 months later again was undeniably and frankly impossible. But the good news is when you're surrounded by your friends and your family, the impossible becomes possible. And they worked really hard to start the process of rebuilding very quickly and frankly, very successfully. This type of repeated flooding makes recovery harder and naturally can even cause some residents to lose hope, and certainly a part of the town residents that they left. It's one of the reasons why I have reintroduced my Repeatedly Flooded Communities Preparation Act, which would help communities suffering from frequent flooding plan for the next storm and hopefully lower the risk. It's my hope that by encouraging flood-prone areas to reduce the impact of future storms, residents will be able to focus on long-term recovery, long after the storm surge recedes. And recovery doesn't simply mean rebuilding. It also includes uplifting our communities. It includes making sure that families and neighbors learn to work together, that the synergy in the aftermath of a disaster is where community and the glue of community really manifests and reveals itself. South Carolinians who've lived through repeated flooding know this, and my home state has taken action to prevent this outcome. South Carolina's recent dedication of resources and strategic mitigation efforts are second to none. In 2023, the state's budget included significant funding for mitigation efforts that would reduce flood damage from future storms. Backing up that investment, the South Carolina Office of Resilience released a nationally praised statewide risk reduction plan, identifying the communities most vulnerable to floods and targeting mitigation resources to protect those residents. These are local solutions to local challenges, and they will make a huge difference in the lives of South Carolinians. And while I recognize that what works in South Carolina may not work in places like the Senator Cassidy's Louisiana or Chairman Brown's Ohio, I'm confident that similar locally based solutions and approaches could make a huge difference, not only in those communities, but to the National Flood Insurance Program itself. To support these levels, we must have substantial reform to the NFIP. Status quo is not an option. The program is financially insolvent with over $20 billion. $20 billion in debt. Instead of educating communities and homeowners on the risks they face, the program's outdated flood maps and lack of transparent data often obscures the risks. Without a well-functioning and financially solvent insurance system, the NFIP will fail to provide cities and towns with the tools they need to be resilient. And if the NFIP is unable to provide local communities with improved mapping and mitigation resources, the financial health of the insurance program will continue to deteriorate. When I say that, especially with my legislation I've reintroduced, we have to recognize that the NFIP pays out 30% of its resources to about 1% of the properties that consistently and repeatedly are flood victims again and again and again. So 1% of the exposure absorbs 30% of the resources. And that's an opportunity for us to look to the local communities to create strategies to perhaps not rebuild there. And that will take a local engagement to mitigate that risk for the nation and for the program and frankly for the communities where they happen. Comprehensive reform of the program is essential. One final important point before I close. Congress cannot allow the NFIP to lapse. Most often we think about states like Florida or South Carolina or Louisiana where they pay a disproportionate share of the premiums that go into the NFIP. The truth is that whether you're in Ohio or California, whether you're in the New Jersey, New York area where Hurricane Sandy, $8.8 billion, Harvey, $9 billion, the number of flood insurance policies in place, essentially non-existent. So not only do we need to have a comprehensive form of the program itself, we need to have a better education that floods don't simply happen when you live near the water. Floods today happen throughout the country.
Thank you, Senator Scott. Senator Cassidy, welcome. Senator Cassidy is not a member of this committee, but he and Senator Kennedy and Senator Menendez especially have been kind of leading on this, and particularly interested. Senator Cassidy will introduce his friend from Louisiana.
Thank you.
Welcome.
Thank you, Chairman Brown and Ranking Member Scott. And I just appreciate y'all having this hearing and allowing me to introduce, which I think is not a little bit out of the ordinary. And I want to appreciate your staff. My staff says your staff has been fantastic to work with, and we thank you for that.
Thank you.
Today I have the privilege of introducing Greater New Orleans, or as we call GON Inc., President and CEO Michael Hecht. Michael moved to New Orleans after Hurricane Katrina with the goal of helping the city rebuild. Previously, after 9/11, he had worked in New York in the mayor's office running their small business recovery program. So when Katrina hit Louisiana, devastating tens of thousands of people and businesses, Mr. Hecht took action by running a similar $250 million Katrina small business recovery program for the state government. He helps when communities have been struck. Now, there's many lingering effects of Hurricane Katrina, which he is going to speak of, but one of the most obvious is the method to assess flood risk. And if I may add, NFIP's new risk assessment policy called Risk Rating 2.0 has made flood insurance simply impossible to afford, in some cases policies rising over 1,000%. In some cases, flood insurance premiums being higher than a person's mortgage. At this point, we know that we're in an actuarial death spiral, where people will be dropping insurance because they can no longer afford, therefore a smaller number of people for whom to put on the risk, therefore more expensive premiums, and therefore more people drop. Mr. Hecht will address this and the impact it's having upon families and businesses. And then lastly, I thank you for having this hearing because of the solution that Senator Menendez and I and others have proposed, which we would love your input, which we think could address this. So I look forward to hearing this testimony and the testimony of others. Once more, I thank you very much for having the hearing.
Thank you, Senator Cassidy. I can't improve the introduction offered by our friend from Louisiana, Mr. Hecht. Welcome. Daniel Kaniewski is the managing director for Marsh McLennan, which he joined after serving as deputy administrator for Resilience and Acting Deputy Administrator for FEMA during the Trump administration. Dr. Kenyevsky, welcome. Steve Patterson, the mayor of Athens, Ohio, the largest city in Appalachia. He currently serves as the second vice president of the National League of Cities, president of the Mayor's Partnership for Progress in Appalachian, Ohio. I meet with him and other mayors frequently. First elected in 2015 after 2 terms on city council, Mayor Patterson's a former associate professor of psychology at Ohio University, former Air Force pilot, serving as a major from the District of Columbia Air National Guard, 13th Fighter Wing, and a graduate of college in North Dakota. So, Mr. Hecht, if you'd begin.
Great. Thank you so much, Committee Chairman Brown and Ranking Member Scott and the members of the committee and Senator Cassidy. I want to thank him for his leadership on this issue and so many others. My name is Michael Hecht. I'm President and CEO of Greater New Orleans, Inc. And for the past decade, we've led the Coalition for Sustainable Flood Insurance, which is a national alliance of approximately 250 organizations across 35 states. And today I'm going to discuss the need to reauthorize NFIP, given its benefits to the country, the need to reform the program that's been discussed, and particularly given FEMA's administration of Risk Rating 2.0, its associated impacts. I want to be clear that first and foremost that the Coalition for Sustainable Flood Insurance absolutely supports a long-term multi-year reauthorization of NFIP to ensure program stability and to minimize the negative impact across the American economy. As Senator Scott mentioned, and as you said, Chairman, a lapse is something that we cannot allow to happen. This is destabilizing to the national housing market. We know, for example, that during a June 2010 lapse that about 1,400 home sale closings were canceled or delayed each day. And furthermore, the benefit that NFIP provides to our nation is great and significant. It's the 5 million policyholders. And I think 2 points I need to make here is that, one, they are often mischaracterized as being wealthy homeowners who are subsidizing their beachfront homes. This is just empirically, statistically not the case. In fact, a study that we ran found that 98.5% of all NFIP policies are in counties with a median household below 100,000, and 62% of all policies are in counties with a median household income below the national average of 54,000. The reality is that the NFIP program is about allowing the working coast and riverine parts of America to keep working. And moreover, and I think this is a very important point, we talk about the debt of the program and the cost of the program, which is estimated to be $36 billion over the past 50 years. But on the other side of that, per FEMA's own analysis, the standards, the floodplain standards that have been implemented because of NFIP have saved the country $120 billion of losses over that period. So that's a net benefit for the American people of about $85 billion. In terms of Risk Rating 2.0, there's some dramatic impacts that I would like to talk about. On average, under Risk Rating 2.0, an NFIP policy will be $1,808, which is a 104% increase over legacy rates, and rates will increase by over 50% in 41 states. To the point that's been made by the senator about the death spiral, this is a major concern about the affordability. Participation peaked at NFIP at about 5.7 million in 2009. On the day before risk rating in October 2021, there were 4.9 policies. Since then, NFIP has lost over 215,000 policyholders, and ultimately, FEMA, through their own projections, projects losses of 900,000, 20% because of Risk Rating 2.0. This is not going to be good for the program or America. And there's also regional impacts. Our region, for example, Greater New Orleans, is essential for the national economy and even global food and energy security. NFIP and risk rating does not take this into account. Good morning, Senator. For example, 50% of all U.S. grain exports go through the Port of South Louisiana, which is in our region. The average increase under Risk Rating 2.0 is going to be 239% in that region. If our workers cannot live there, this is going to have impacts on our ability to supply America and the world with food. And finally, in conclusion, we do believe that NFIP should absolutely be reauthorized, but also reformed. Congress did not cause the Risk Rating 2.0 problems, but has the ability to impact them and to make them better. So some of our priorities, many of which are reflected in the National Flood Insurance Program Reauthorization and Reform Act of 2023, include requiring a peer review of Risk Rating 2.0 methodology and a thorough and holistic analysis of economic impacts, mandating FEMA's transparency through the release of a usable public-facing risk calculator and also a rating appeals process. We need to lower annual premiums from 18 to 9% cap. We need to enact a means-tested assistance program, ideally looking at housing burden, which is a little bit more subtle than even just looking at percentage of AMI. And finally, the debt and interest payments should be frozen and redirected into mitigation, because ultimately mitigation is how, as a nation, we are going to work our way out of this challenge. These policies, which will resolve affordability, transparency, and accuracy concerns, would serve to stabilize participation, sustain the program, and support communities across the country. Again, thank you for the opportunity to speak today, and thank you for your service, and I look forward to taking your questions. Thank you.
Mr. Heck. Dr. Kaniewski.
Chairman Brown, Ranking Member Scott, my name is Daniel Kaniewski, and I focus on public sector challenges and solutions at Marsh McLennan, the world's leading professional services firm in the area of risk, strategy, and people. We are a U.S. company with more than 85,000 colleagues worldwide, advising public and private sector clients in 130 countries. With more than 150 years of experience, we help individuals, businesses, communities, and governments address the financial impacts of disasters through insurance and other risk management tools. Before coming to Marsh McLennan, I was the second-ranking official at the Federal Emergency Management Agency, FEMA, where as the agency's first deputy administrator for resilience, I served alongside some great leaders of this nation. As you can imagine, much of my work is focused on flood risk. I welcome the opportunity to speak to you today about that. Now, as was said, flooding is the most common and most costly natural hazard, and yet communities often fail to protect themselves from the physical and financial impacts. Federal policies and programs, including the NFIP, are essential, but ultimately all disasters are local, and so too are resilience investment decisions. To increase the resilience of communities against the pervasive risk of flooding, we believe that risk transfer, that includes the NFIP, private flood insurance, reinsurance, and parametric insurance, should be paired with risk reduction, hazard mitigation, and strong building codes. Now, there are several ways to improve flood resilience. And for the NFIP, as we describe more fully in our written statement, those include strengthening the NFIP with a sound financial framework, protecting the NFIP with reinsurance solutions, growing the private flood insurance market, addressing gaps in NFIP coverage, embracing parametric insurance, promoting excess flood coverage to complement the NFIP, and leveraging existing NFIP incentive programs. On that final point, I wish to elaborate. One existing NFIP incentive program is the Community Rating System. CRS is a voluntary incentive program that recognizes and encourages floodplain management practices that exceed NFIP's minimum requirements. It's an example of a federal program that incentivizes community action on risk reduction and risk transfer. Tulsa, Oklahoma is one of 2 communities nationwide that have achieved the CRS's program's highest program rating. I recently spoke to the Oklahoma Floodplain Managers Association annual conference in Tulsa, and I saw firsthand how the city had transformed its approach to flooding. The conference host, Annie MacVest, helped Tulsa achieve its noteworthy status, and NFIP policyholders there now enjoy a 45% discount off their flood premiums. Now, apparently I wasn't the only one to notice Annie's accomplishments. Oklahoma Governor Kevin Stitt recently appointed Annie to serve as the state's top emergency management official. In addition to FEMA grant programs, though, that incentivize these resilience investments, states have been launching their own innovative programs. Said best by Russ Strickland, he's the Secretary of the Maryland Department of Emergency Management and recently elected to be the president of the National Emergency Management Association. His quote is, "Hazard mitigation is the center of the universe." To that end, South Carolina recently announced $200 million for flood resilience projects, while Florida South Carolina, Alabama, and Louisiana, and others have programs aimed at incentivizing homeowners to strengthen their homes against hurricane risk. As a recent academic study reviewing the Alabama program found, that participating homeowners saw their insurance premiums reduced and their home values increased, confirming our view that resilience pays. Beyond government programs, the property and casualty insurance and reinsurance industries are developing innovative programs to protect communities and homeowners against floods. Community-based catastrophe insurance, or CBCI, is a parametric product pioneered by Marsh McLennan. It provides disaster insurance to local government entities that wish to cover a group of properties. The program enhances financial resilience by simultaneously providing affordable coverage and creating incentives for risk reduction. Our recent CBCI pilot in New York City was developed in partnership with the City of New York and several nonprofit and insurance industry partners and funded by the National Science Foundation. It provides a level of financial protection for low to moderate income households that previously lacked insurance. More broadly, other industries, such as the finance and real estate industries, can incentivize flood resilience investments together with the insurance industry and all levels of government. The National Institute of Building Sciences recently issued a roadmap for resilience incentives, specifically highlighting how residential structures prone to flooding would benefit from these incentives. The report identified co-beneficiaries of mitigation investments and highlighted how these co-beneficiary industries can together help pay for these investments. Thank you for your time today and the opportunity to share how federal, state, and local programs, together with innovations from industry, can help close America's flood resilience gap. I look forward to your questions.
Thank you, Dr. Kaniewski. Mayor Patterson, welcome.
Thank you. Good morning, Chairman Brown, Ranking Member Scott, as well as the esteemed members of this committee. I appreciate the invitation to speak to you on behalf of the National Flood Insurance Program. I'm Steve Patterson, the mayor of the great city of Athens, Ohio, home to Ohio University, also the second vice president for the National League of Cities, representing 19,000 communities, cities, villages, and towns across the United States, and the president of Mayor's Partnership for Progress, which represents 19 Appalachian counties and 120 communities and 800,000 citizens across Southeast Ohio. Cities, towns, and villages are experiencing a higher frequency of intensity of extreme weather events, including hurricanes, floods, wildfires, heat waves. These severe and unpredictable weather conditions are leading to large-scale disasters that can overwhelm existing infrastructure as well as emergency response capabilities. As we discussed the flood insurance, the recent devastation that we're seeing in San Diego highlights the reoccurrence of impacts of flooding on our cities and residents. My thoughts go out to Mayor Gloria and the San Diego residents during these tough times. Ohio University, like many cities, has also experienced floods, most notably the 1968 flood, in which we crested at more than 24 feet, 20 feet flood stage, which created a large problem for the city of Athens. Since then, we've been working with the Corps of Engineers to mitigate a lot of those flood events that we see in our city. While Athens strives to reduce flood risk, concern persists about the potential for significant events like San Diego's. That's why NFIP is critical to offset these potential losses as such disasters and to protect our communities. NFIP ensures rapid access to funds for repair and restoration, minimizing the economic strain that affect our families and contribute to our community's resilience, recognizing the critical need for long-term reauthorization of the NFIP. NLC has endorsed the National Flood Insurance Program Reauthorization and Reform Act. Beyond individual homeowners, NFIP impact extends to economic stability at the community level. The program's commitment to prompt financial assistance prevents prolonged, and I mean prolonged, economic impacts, and financial assistance prevents these long-term and these downturns, resulting in extensive property damage. This stability benefits not only homeowners, but also the ripple effects on our local business economies, our schools, public services, supporting the overall well-being and vitality of our communities. NFIP further empowers comprehensive floodplain management, catalyzing local governments to establish long-term floodplain management strategies. This includes detailed maps, risk assessment, and mitigation plans. Through NFIP, municipalities gain access to resources and expertise, enabling proactive measures such as robust zoning regulations, integrated flood risk considerations into land use planning, and critical infrastructure improvements. Cities such as Athens are implementing strategies like green infrastructure, resilient housing, community-based disaster preparedness, smart technologies, inclusive planning, stakeholder collaboration, social infrastructure investment, and adaptive transportation. These efforts underscore cities' commitments and to thrive and adapt in a changing world, while state, federal, and local investments from Infrastructure Investment and Local Jobs Act aims to minimize losses caused by extreme climate events. The allocation funds still fall significantly below the escalating demand to combat the increasing risks of extreme weather events. Local governments continue to need additional funding and resources to enhance our collaborative efforts to bolster resilience, protect communities, and ensure the long-term sustainability of our infrastructure. NFIP continues to provide flood insurance for property owners due to challenges in the private flood insurance covering in the many at-risk areas. Concerns about cherry picking by private insurers, leaving vulnerable communities for NFIP, raising equity issues and threatening the sustainability. NFIP's capacity to address challenges from catastrophic floods positions it as a vital player, and I mean a vital player, in providing financial protection to at-risk communities, a role elusive with the private sector. NLC's members are also concerned about the sluggish pace that funding is being dispersed in the Community Development Block Grant Disaster Recovery Program, CDBG-DR, hindering long-term recovering efforts after disasters. Bureaucratic hurdles and lengthy processes delay the much-needed funds, impacting the ability to promptly address urgent needs and slowing down the overall recovery efforts. That is why NLC supports the bipartisan Reforming Disaster Recovery Act in the hopes that the legislation would significantly improve the CDBG-DR program for faster community recovery from major disasters. In conclusion, the NFIP is a critical resource offering financial protection for residents and aiding in building resilience and sustainable communities. The National League of Cities eagerly anticipates collaboration with this committee to ensure NFIP remains an effective tool in safeguarding communities nationwide. Thank you for your attention. I am available for further information or for questions.
Thanks, Mayor Patterson. Thank you all for testifying. We are going a bit out of order. Senator Scott and I have agreed on that. We are at the request and the agreement of the ranking member, Senator Kennedy of Louisiana, will be the first to ask questions. I understand you've been called away for a constituent event related to D.C. Mardi Gras. And I would hope, Senator Kennedy, that I don't ask for much from you except to stay within your 5 minutes, but I hope that maybe there'd be a king cake in it for Senator Scott and me. Senator Kennedy.
When you get back to your office, you'll have a surprise.
Senator Kennedy, if you go 7 minutes, I'll give you more.
Okay.
Sorry, that wasn't part of the agreement ever.
I want to thank our esteemed chairman and ranking member, Senator Tester, for accommodating my schedule. Thank you all for being here, especially to my friend Michael Heck. He's a very talented, able guy. Michael's head of the business community in New Orleans and the surrounding area. I can say some things that he can't say. We have two problems in Louisiana in terms of flooding. We have hurricane flooding and we have non-hurricane flooding. I want to talk about the non-hurricane flooding first. When New Orleans gets 2 inches of rain in a short period of time, it floods. Why? Because New Orleans is below sea level, and it's in a bowl. It's in a bowl. That's why our founders in the city built first in the French Quarter, because it's the highest area. We have what's called the Sewage and Water Board, which has pumps when it rains a lot to pump the water out. We've had that for years and years and years and years. The taxpayers pay for it. And for years and years and years and years, it has been a model of inefficiency. In fact, it has been a cesspool of political patronage and corruption. Now, Michael can't say that because the business community doesn't want to say that because they're worried about retribution from the politicians. But it's the truth. Look at the headlines from our TV stations. Payroll fraud in a secret sex room. Troubling allegations at New Orleans Sewage and Water Board. Former New Orleans Sewage and Water Board employee sentenced for theft scheme. New Orleans Sewage Water Department raided by FBI. Ex-Sewage and Water Board official has to pay back $100,000 he stole. Next headline, we knew the Sewage and Water Board was dysfunctional. Now we know it's corrupt. The people of New Orleans deserve better. And what we need to do is one of two things. The politicians have had their shot. They missed. We need to either turn the Sewage and Water Board over to the state of Louisiana and let somebody else run it, or we need to privatize it. Because the Sewage and Water Board's plan right now, when it floods, when half of the pumps are broken, you know what their plan is? I kid you not. Move to higher ground. Where? Now, the second problem is hurricane flooding, and this is the National Flood Insurance Program. We need a national flood insurance program that looks like somebody designed it on purpose, because the one we have right now is not. The old one wasn't great, but at least it sort of worked. A few years ago, the FEMA decided they were going to reinvent it. And they hired an outside group, a consultant, paid them bucket loads of money called Milliman. And Milliman came up with a new algorithm. And this algorithm is so good, they say they can look in the future and look at each individual home and predict whether it'll flood or not, 20 years from now. They made all kind of wild allegations. Any day now, I expect FEMA to say, this algorithm is so great it'll grow hair, or it'll cure ED. And I say, man, I need to see this algorithm. Can I see it? No. If we show it to you, I'll have to kill you. And I'm in charge of their budget. They lied. They lied. They have the credibility of Jussie Smollett and Michael Avenatti put together. They lied. They said 1 million people of the 5 million people will see their rates go down. I haven't talked to a single person who's seen their rates go down. This is just an excuse to raise premiums, and they don't care. The whole purpose of the National Flood Insurance Program is to provide a product that people can afford. In my state, here's what the premiums have done. They said, a lot of you people, Kennedy, they'll see a decreases. Terrebonne County, we call our parishes, our counties parishes, 305% increase. Another parish, 321%. Plaquemines Parish, 540%. FEMA lied. And they're not going to do any better. Now, the best part of Senator Menendez's bill, it's a good bill. I'm on it. He and Senator Castile, we've all worked hard. But it's going to cap the rate increases at 9%. Right now, FEMA can raise the premiums 18% every single year. And they're going to keep doing it because they don't care. They lied to the American people and my people. And they ought to hide their heads in the bag along with all the politicians that have allowed the Sewage and Water Board to steal money for all these years. Thank you.
Thank you, Senator Kennedy. Senator Tester's recognized for 5 minutes from Montana.
Yeah, thank you, Mr. Chairman. And Senator Konuski said that he quoted another person saying hazard mitigation is the center of the universe now. We thought it was Cleveland, but maybe not. Enough of that. So look, we're on our 28th straight short-term extension of the National Flood Insurance. Beyond ridiculous, quite honestly. My question is for all three of you, but I only want you to use it for 30 seconds because you could all talk on it for 10 minutes. And that is, from this committee's standpoint, what would you prioritize, besides the extension baloney, what would you prioritize in an NFIP bill as the most important qualities? Go ahead. We'll start with you, Mr. Heck.
Thank you, Senator. First would be affordability, because we want to make sure that people stay in the program and it doesn't go into a death spiral. The second would be comprehensibility, so people understand what they can do to make improvements and what they're paying for. And the third, most fundamentally, would be money for mitigation, because hazard avoidance, reducing exposure, is the center of the universe, and it's how we're going to improve this for our nation over time. Thank you.
Okay, go ahead, Mr. Knudski.
My answer is going to be hazard mitigation.
Okay.
Hazard mitigation, because not only does it protect existing homeowners against their existing risk, it helps protect homeowners in the future and anyone else who purchases that home in the future against future risk.
Okay.
It also gets at the affordability issue, because if you've reduced your risk, you should also be able to reduce your rates.
Okay. Mayor Patterson.
I would have to echo the affordability. I would also recommend looking hard at the CDBG DR to streamline that. I come from one of the 3 chronically distressed counties in the state of Ohio, and when I look at affordability and look at my residents and my constituents, it's a big challenge when you live in the chronically distressed part of the state. And that's not just in our state. I look at all of Appalachia and see the exact same thing. It's the affordability and streamlining access to CDBG DR to where it's getting out more quickly and more effectively.
Thank you for that. I'm going to go back to you, Mr. Heck, because you talked about sustainability. All 3 of you talked about affordability with the last answer, and I agree. It doesn't do any good to have insurance if it's not attainable. But you also talked about sustainability, which is pretty damn important. We're $30 billion in the hole on the National Flood Insurance Program right now. I've worked with Senator Vitter, Senator Kennedy's predecessor, and Senator Heller from a different angle on flood insurance. Affordability is always the issue, and sustainability means it's paid for, right? At least that's my definition of it. So how do we do this? Because when you're comparing the premium to risk, it is, well, you correct me if I'm wrong, the risk is pretty significant.
Yes, thank you. So I think that there's 2 ways of looking at this. One is on the cost and efficiency side, and I think that Senator Scott spoke to this, the fact that 1% of claims are accounting for 30% of the payouts is something that clearly needs to be addressed.
And how would you address that?
Well, I think that you're going to have programs that basically say that if you are a repetitive loss building, that at some point you don't qualify for new payouts. You basically need to be remediated, and you can't build there any longer. There has to be a recognition of being smart about this program going forward.
So let's put this in plain talk. In other words, what you're saying is if you have an event that is expensive, unless you do some pretty significant mitigation, you're not going to be eligible for the policy anymore.
I would say there's a little bit of a subtlety to that, because I think we have to define what is the appropriate definition of repetitive. If you have one event, then you shouldn't be taken out of the program. And I don't know, and I can't say today what the exact level should be, but there should be some point after 2 or 3 events that if you haven't mitigated and reduced exposure on your own or using public assistance, then you don't get to continue to be a bad penny.
So, and I hate to keep going down this round, but look, Senator Kennedy talked about being below sea level. Mm-hmm. That's a problem. Building in the floodplains or rivers is a problem. We see the same thing, by the way, with fires. You build in the middle of the forest is going to burn, I mean. So the question is, and yet we have taxpayer subsidy of this program. We got taxpayer subsidy of a lot of programs, by the way. But we have taxpayer subsidy of this program. So how do we really get it to a point? Because I do think sustainability is important. How do we get it to a point where it's a sustainable program so that we're not dependent upon the U.S. taxpayer for people who make bad decisions?
Right.
Because, yeah, go ahead.
No, it's a very complicated issue. So one is efficiency. I think the other question we have to look at is the way the Write Your Own programs are critical to us. They work for us, but should you get 30% continually as the rates continue to go up? That's a question. On the other side of it, I think that we were able to be in Amsterdam over the holidays. When you arrive in Amsterdam Airport Schiphol, there is a sign there that says, "Welcome to below sea level." They have mitigated so well that it's actually a positive for them. So we do have the ability to design structures that protect communities and homes in a way that ultimately will reduce the exposure to to the taxpayer. And finally, flood insurance, I would argue, is really a social good. We need to live and work near water as a nation, so we have to have programs that maybe provide some level of as you said, cross-subsidization.
Thank you all three for your testimony. I appreciate it.
Thank you, Senator Scott of South Carolina.
Thank you, my good friend Tester asked a really good question about the impact of all these challenges, repeated losses. But one of the things that at some point we're going to have a conversation as a nation about a comprehensive catastrophic occurrence approach. The truth of the matter is that if you live in inland, name your state, your exposure and education on flood insurance or the necessity of flood insurance or the NFIP is probably just absent. If you live in Charleston, we may have a tornado every now and then, but not a big deal. If you live in Colorado or California, your exposure to fires and totally different experience. But if you live in America, the fact is simple. We, the taxpayers, have paid out hundreds of billions of dollars over the last 10 years because of catastrophic occurrences. It matters where you live to what the occurrence is, but it is occurring everywhere. And so while we're here today to talk about the National Flood Insurance Program and the importance of understanding how to mitigate that risk, the truth of the matter is that we at some point need to have a serious conversation about the comprehensive nature of catastrophic occurrences that an insurance company cannot create a probable maximum loss, which means that experience or that occurrence will not be insured at some point because you can't figure out how to have an actuary sit at a table and figure it out. So without that comprehensive approach, we really are missing the target by a mile. That said, if a home floods and the owner doesn't have coverage, Mr. Kanuski, what are the options?
Well, if I can back up a second and say if they don't have flood insurance, the first time they may learn about that will be when the flooding happens. Far too many Americans believe that flood insurance is included in homeowners' policies. It is not.
That was my second question.
And then they also may believe that the federal government will be there to help them. Now, again, in my role at FEMA, absolutely, if there was a presidentially declared disaster, FEMA was there to help. But the amount of assistance that FEMA is legally able to provide to a homeowner who has experienced a loss of any kind, including a flood, pales in comparison to what insurance would pay.
And I'm not sure if the number is $39,000 from FEMA or $40,000, but it's not $400,000.
Correct.
It's not $50,000. It's actually around $39,000 to $40,000 last time I checked. And I haven't checked for this hearing. But I will say this, that the fact of the matter is that the floods that are occurring in different places every year, and the places where we're seeing floods occur, as an example, we had I think it was 2015 or so, we had a 1,000-year flood in South Carolina, not in Charleston, not in Myrtle Beach, not in Hilton Head, in Columbia. The community could not have been prepared for that because it's not supposed to flood in Columbia, South Carolina. But that actual experience is happening throughout the country in places where they don't expect it to flood. So having a conversation about the necessity of flood insurance is very difficult. Having sold it as an agent on the coast, it's very difficult to tell someone who's 100 yards or 1,000 feet away from the water that you need flood insurance. It won't happen to us. We'll just build high enough. Well, sometimes high enough is a relative definition. So we do need to have a different marketing strategy and approach as it relates to preparing for flood in places where we just don't think it's going to flood. During my opening statement, I mentioned some recent actions taken by my home state of South Carolina, providing communities with tools they need to protect their residents. Combining significant state investment in flood mitigation with a variety of mitigation strategies seems like a recipe for success at the local level and has positive impacts at the national level. Mr. Kanuski, could you provide us with any thoughts you may have in about 30 seconds on this approach?
Well, first, I too applaud the state of South Carolina. I mean, it is really a rare event where you see a state stepping up and saying, we're going to commit hundreds of millions of dollars to address this risk in our state. We're going to protect our citizens. We're going to protect our municipal infrastructure. We see it as a societal benefit. And I just want to pause for a moment and say what a big deal that is, because not only will that protect the citizens of South Carolina, it will protect the American taxpayer.
Thank you for that, Mr. Chairman. With my last 2 seconds left, just quickly, when I think about the hundreds of billions of dollars paid out because of natural catastrophic occurrences, one thing I didn't think about until you just mentioned it is that the public sector for public infrastructure pays out on top of that expense. So I would imagine in the last 10 years, we've exceeded $1 trillion of payout for the residents and the public infrastructure around this country for an occurrence that's going to happen again and again and again.
Thank you, Senator Scott. Senator Menendez of New Jersey has probably put more thought into this issue than anybody on the panel. Thank you.
Thank you, Mr. Chairman. Thank you and the ranking member for holding this hearing. I'm not as colorful as Senator Kennedy, but I agree with a lot of what he had to say. Since FEMA recently changed its rating methodology, the program has lost 150,000 policyholders. FEMA itself has estimated that it will lose 1 million policyholders by the end of the decade due to the premium increases. In Paterson, New Jersey, where the median household income is $50,000 a year, policyholders will see their premiums increase from an average of $1,500 a year to an average of $4,000 a year. In Keansburg, New Jersey, where the median household income is $76,000, 1,000 policyholders will go from an average of $1,300 to $3,500, and the list goes on. So, Mr. Hecht, Mayor Patterson, can working families handle these types of increases?
Thank you, Senator, and thank you for your leadership on this issue over many years. One of my notes here I just looked at, which I think it's important to say, is that the challenges of flood insurance, which would be difficult for a working class family to handle on their own, are being compounded now by inflation, which is making groceries and gasoline more expensive, and then homeowners insurance, which is being driven by reinsurance, which has gone up, I know in Louisiana, about 65%, I think nationwide between 15 and 20%. So we really have a middle class, working class affordability crisis throughout the country, where flood insurance is just one of the vectors.
Mayor?
Yeah, I would add to that, in Athens County, the median household income is around $42,000, so it's much lower than the national average. It is a challenge, to have that added burden, especially those who are living within the floodplains, within the city and throughout the county. It's going to be an exceptional burden on them, and to echo the already existing cost of living increases that we're all experiencing. But again, my default becomes the distressed counties in Appalachia.
What happens is that families who are forced to drop their flood insurance coverage due to rising costs and later suffer damage in future disasters, that's the ultimate disaster to them. And look, insurance is about spreading risk, right? The wider the pool, the less the costs. The smaller the pool, the higher the cost, and that drives people out at the end of the day. And so, if we think about how much money taxpayers have paid when there is a disaster declaration, true, not as much as an insurance company will pay, but still, that's a taxpayer dollars. And I haven't seen too many presidents, when there's a natural disaster somewhere in the country, say, sorry, I'm not going to give you a declaration. They give declarations, which means the taxpayers' monies are being spent. So we should put that in as part of the equation, understanding that. And if the private sector could do this and do it at a reasonable cost, I'd be all for it. But we have seen that the private sector just really is not going to go into this in a way without a backstop that ultimately creates that opportunity. So, the NFIP REACT that I introduced, myself, Senator Cassidy, Senator Kennedy, and a whole bunch of others on a bipartisan basis, lowers the statutory cap to 9%. The average annual increase that policyholders have seen since the Homeowner Flood Insurance Affordability Act of 2014 was signed into law. It also creates a voucher program to help families buy into the program. And endless increases help no one remain in their homes if there is unmitigated and uninsured consequences. A long-term reauthorization of the program must include robust funding, as I think you've all talked about, mitigation. to decrease the risk profile of the program, provide a sound financial future for it. If we know right now which homes are most at risk, we shouldn't wait until a flood to step in and help. For every dollar of mitigation, the federal government saves $7 in disaster relief payments. But there is one critical mitigation financial tool of the NFIP, the increased cost of compliance coverage, that's grown obsolete. Mr. Knudski, how much does it cost to raise a home in general?
Unfortunately, flood mitigation measures, especially one that you just described, are among the most expensive hazard mitigation measures.
Probably anywhere between 100 and 150,000. We did this in New Jersey after Superstorm Sandy. And currently, the ICC coverage only provides 30,000 to raise a home, which is no longer sufficient to get a home in compliance. That's why our NFIP REACT modernizes increased cost of compliance by increasing the amount of coverage available to 120,000 and making it accessible the moment homes are out of compliance with building codes. And so in my mind, there's a series of things that we can do. But if we believe that sustainability is going to be driven purely by rates and payment, then we're going to drive not 1 million, we're going to drive a lot more people out of the National Flood Insurance Program. That will collapse. And then we will be in a set of circumstances when a disaster takes place. We'll have disaster declarations, we'll spend the taxpayers' money, but we'll have no mitigation from the private sector side and from the individual citizens' participation. Not to mention that the home of their, the value of their home, Mr. Chairman, goes to the basement. Because if you're in a flood zone and you don't have flood insurance and your mortgage requires it, or if you want to sell and someone needs to get flood insurance and can't afford it in order to buy for the new mortgage that may be acquired on that home is virtually worthless. And so these are all parts of the equation that we have to think about, and that's what we try to do in our legislation, and we look forward to working with the chair and others to see if we can make something happen. Thank you.
Thank you, Senator Mendes. Senator Britt of Alabama is recognized.
Thank you to the witnesses for being here. Certainly appreciate you taking time to be in front of us and let us ask important questions. I want to first echo some concerns that I previously highlighted before this committee related to government overreach and overregulation. We've seen it across the board. In all financial institutions, they're bringing, the regulators are bringing, under this administration, more regulation, more overreach, more burden, and unfortunately, the Federal Insurance Office is no different. In November, the Treasury Department announced that it's moving forward with FIO's climate data call, and this is just yet another blatant effort to overstep into the state-regulated insurance industry and collect incredibly detailed information from our communities. The effort completely undermines our well-functioning state regulatory system and is an effort to pursue this administration's climate agenda at the cost of both taxpayers and industry. That's why I introduced the Insurance Data Protection Act with 16 of my Senate colleagues, including all of the Republican Banking Committee members. The bill would rein in the overreach we have seen from the Federal Insurance Office and keep the office as it was intended to be, an informational body that supports the efforts of our state insurance regulators. State insurance regulators understand the unique needs, including the weather challenges faced by their communities, and they help drive solutions. Unfortunately, Alabama is no stranger to the impacts of our natural disasters. We've experienced the devastation of everything from tornadoes to hurricanes to major weather events and everything in between, the effects that those have on families, homeowners, and communities. Even this week, we are preparing for strong storms and flash flooding across southern Alabama. It is imperative we are forward-thinking in our disaster mitigation, disaster preparedness, and resiliency efforts. The Alabama Department of Insurance, in particular, has been a champion in this space. In 2011, Alabama established the Strengthening Alabama Homes program, designed to aid and incentivize Alabama homeowners to improve their homes and to minimize property loss due to weather events. Mr. Knudski, I appreciate you highlighting these efforts in your written testimony. You specifically touched on the Fortified Roof program that we have in Alabama and a report by 3 universities that studied the demonstrated benefits of the program. In short, the study found that the program directly resulted in 1, lower insurance premiums, and 2, higher home resale values. For those that may not be aware of the efforts in Alabama, can you further describe them and touch on the proven benefits that they have to homeowners?
Well, thank you, Senator. And I got to say, in many forums, I often laud Alabama. Alabama has 3 really notable things that you touched on. 1, they have a resilience council. They created a council, and you say, oh, the council, big deal. No, it is a big deal because it meant the governor is prioritizing resilience. Moreover, the co-chairs of that council are the state emergency manager and the state insurance commissioner. In some states, those 2 don't even speak. In Alabama, they sit together and they work on these resilience issues jointly. So kudos number 1. Kudos number 2, strengthen Alabama homes, as you mentioned. That program has been so successful that other states are now replicating it. Louisiana is now putting it into place, a virtual carbon copy of what Alabama put in place. And your state insurance office is working very closely with the state of Alabama to help them implement that program. So again, kudos. 3, the study you mentioned. You're lucky to have a researcher named Lars Powell at the University of Alabama who did that study. I thank Lars any opportunity I have because that is the first study that I've seen that gives empirical data, real evidence that mitigation pays.
Thank you. And so how do these types of efforts play into the larger discussion that we're having today? I mean, around reforms to the National Flood Insurance Program and particularly on incentivizing communities to focus on disaster mitigation, preparedness, resiliency. Can each of you just speak to that quickly?
Yeah, thank you, Senator. I would say Louisiana competes with Alabama or tries to on many things like football. But
Roll Tide.
in this case, the Fortified Roofs program that y'all have put out there is the one that we model on. We were recently in London meeting with Lloyd's talking about that program. And what we love about that is that we're going to debate affordability and how we make this work. Ultimately, it is going to be community-based resilience, which prevents the damage from happening, that reduces exposure. That's the answer for our states and our country.
Thank you.
Well, we certainly have studies that are out there, like the National Institute of Building Sciences, that puts out great work on the 6-to-1 number and 7-to-1, even 11-to-1 on building codes. But rarely do you see an opportunity where, state as a living laboratory puts those ideas into action and shows with real data, with real homes, that resilience pays.
I think what I would add, and when you're speaking of test cases, the city of Athens is in earnest taking on flood mitigation, given that we have the Hocking River that runs right through the center of the city. We, as I mentioned earlier, am home to Ohio University, where back in 1968, and before that, the campus was completely split in half during high water events with flooding that was taking place. We have since worked with the Corps of Engineers to basically reroute the Hocking River, move it to where it was no longer as significant a flood threat, but it's still a flood threat in the city of Athens. And so we've in earnest gone to great lengths to remove a lot of the invasives along the bank line, the banks of the river itself. And in doing so, we're reintroducing native trees that are high volume suckers, if you will. With sycamore trees, black willows, and swamp oak that are lining that now, which really helps when we do have high water events, that we're able to clear that watershed more quickly with absorption, but also creating a more laminar flow through the city of Athens by removing the invasives, which basically acted as snags to catch deadheads and other debris, therefore creating these basically an artificial fast-moving flash flood dams. And so that's been effective. We've seen that that's been very effective with reducing the flooding that we're seeing in different neighborhoods throughout the city. And we're going to continue on that mission. We're currently working with the Corps of Engineers under Section 206 as well as 1135 to help work with them to explore different ways to where the tributaries coming into the Hocking River are also reduced. We've had significant flooding on some of the tributaries, but I guess my point being is that there's a lot of things that cities can do, villages can do. Now, I will also add this, that when it comes to cities and villages, capacity becomes a real concern. Do they have the capacity? Do they have the financial wherewithal to be able to address some of these things? And I would say in the cities and villages that I engage with that are small, the answer is no.
Thank you very much. We've got to empower homeowners and communities to be resilient against these storms and weather conditions. Appreciate it.
Thanks, Senator Brett. I will continue to waive my questions for the committee. Senator Warren.
Oh, thank you, Mr. Chairman. So climate change is wreaking havoc on our communities, and with global temperatures on the rise, natural disasters are coming more often and they're doing more damage. And with floods accounting for about 2/3 of the costs of all natural disasters, our nation's flood insurance program is feeling the strain. In just the past decade, the National Flood Insurance Program has been hit by 4 of its top 10 costliest events in history. More floods, more intense floods mean that more families and businesses need flood insurance more than ever before. Last year, parts of Massachusetts were devastated by historic flooding, causing millions of dollars in damage to homes, to businesses, to farms. Modeling shows that over 100,000 properties in the Commonwealth that aren't in FEMA's flood zones and don't have flood insurance are at serious risk of experiencing a flooding event. Mr. Heck, you're an expert on the flood insurance market. With climate change on the rise, more people need flood insurance. Does that mean that everyone who needs flood insurance today gets that insurance?
Absolutely not. Only about 4% of U.S. homeowners have flood insurance, and clearly that number should be much, much greater.
In short, our flood insurance system is not working right now. The best and most important thing we can do is tackle the root of the problem. We should be making big, bold investments to stop climate change in its tracks and to reduce the risk that floods pose to our nation's communities. But at the same time, we need to make sure that we understand exactly how the ongoing climate crisis is affecting our insurance markets. So, Mr. Heck, let me come back to you. We know a few things about how climate change is changing access to insurance. We know that premiums are up by hundreds of dollars a year in many areas. We know that private insurers have pulled out of flood-prone states like Florida and your home state of Louisiana. But if we wanted to know exactly why an insurance company was pulling out of Leominster, Massachusetts, for example, and what insurance options were available to people in Leominster at what premium levels, do we currently have data available to be able to do that?
Senator, no. So NAIC collects data that's at a state level, policies in force and so forth, but I don't believe we have that level of granularity.
Okay, so down at the homeowner level, at the town level, at the area that's flooding level, we just don't have that information. You know, the Federal Insurance Office at the Treasury Department is now working to try to fill that gap. In November, FIO proposed a plan to collect data from insurers on how climate change is affecting Americans' access to insurance and to the affordability of that insurance, including information on premiums, coverage, and claims. Mr. Heck, FIO has proposed gathering data about the effects of climate change on one type of home insurance. Would it be helpful if the administration gathered data on more types of insurance, like flood insurance, and about more categories of information, like the reasons for policy cancellations?
Two quick answers to that. One is that as a homeowner, you're looking at the cost of staying in your home, which is all types of insurance, plus your mortgage note and your car payments and so forth. So the answer is yes. And then second, I think good data is power.
So we're in the same place. I always want more information, and particularly in an area like this, we have to understand the problem in order to fix the problem. The Biden administration should finalize its data call about the effects of climate change on the insurance market as soon as possible. And the administration should collect all of the data necessary to understand our gaps in insurance coverage and to work out the right regulatory response. Absolutely. Good. Thank you all very much. Thank you for being with us today.
Thanks, Senator Warren. I want to go back to your talk about, Mayor Patterson, your talk about what you did in Athens. From that, I was in high school, and I remember I didn't know much about that part of the state, but I was maybe a sophomore in high school, and I remember that flood, and just first time I really thought about something happening relatively close to home. Talk about opportunities beyond what you did to encourage collaboration between universities and communities. OU, for those you all know about Ohio University, but it's a big university in a relatively small town and has huge impact on the town, 95% positive impact, I would say. I'm not discussing the other 5% of the difficulty with always town-gown relations, but if you would comment on that, Steve.
Senator, thanks for the question. There's a lot that we're doing. We're blessed in that we have Ohio University and great partners with the city, not just the city of Athens, but also the regional campus cities. By having the Voynich School of Leadership and Public Service, they've got a strong GIS mapping arm, and so that college or school in and of itself is a resource that has been made available to the Mayor's Partnership for Progress, which I've already mentioned. And so they play well with us to scrape the data that is necessary for us to understand the flood risks, as well as better understand those with the greatest need when it comes to the impacts of flooding in our region. So they've been a great partner. I would say that having a workforce, a volunteer workforce at that, of the 19,000 students at Ohio University, they take part in doing a lot of the tree plantings that I had just mentioned. We've planted over the past 8 years more than 411 trees, both along the river and inland as well, to not only protect us and mitigate for flooding issues, but also, our decarbonization mission that we have in the city of Athens, which is pretty strong with a 4% sequestration of carbon. But it's the students who come and help us work with that. The river sweeps that take place, they are engaged in that effort as well. But, for me to have the ability, and it doesn't hurt that I taught at Ohio University for 18 years of my life, I know the schools and the departments to go to use those resources. But again, as I'd mentioned, we're using them now in the cities of Zanesville, in the city of Ironton, in the city of St. Clairsville, where there are regional campuses, and it's become a real force multiplier to have access to some of these resources, to where, again, the capacity in some of the smaller cities and villages to be able to get this type of work done is insurmountable to them. They won't even think about it. They're thinking about having someone who's going to be hired to drive the snowplow versus someone who's going to be their GIS tech.
Few campuses have the reputation of activism the way yours does, the way OU does, and I appreciate your talking about the branch campuses. I've introduced a bill, the Neighborhood Tree Act, to help communities plant more trees. I was informed that my thinking on that was informed about a book I read some time ago called Urban Forests, or Urban Trees, I think, and how I remember that one of the things that that this book pointed out was an aerial picture of Los Angeles County showed that Beverly Hills was 55% tree covered, and South Central, one of the poorest parts of the city, was something like 13%. I was also informed by the work you did because of the Hocking River flooding. So this legislation surely can make a difference in helping in a significant, not a hugely consequential way, but significant in some communities. Let me go, Mr. Heck, to you for a moment. Then if I have time, I'll come back to you, Mayor. FEMA reports it can't pay back debt stemming from previous disasters. We'll have to pay nearly $8 billion in debt interest, as you know, over the next 10 years. In 2017, at the request of the Trump administration, we forgave $16 billion of the program's debt following Hurricane Harvey. I'm glad to hear you agree that forgiveness is important. Would you like to comment on the benefit of using NFIP's resources for things other than interest?
Yes, I thank you, Mr. Chairman, and I agree with the doctor that if we can use those funds to invest in mitigation at the community level, things like levees at the individual levels, providing for better roofs or elevating homes, we're going to reduce our exposure over time. And so if you think about exposure and cost, kind of like net present value, like a stock, it's going to improve our stock price by making these investments today. So it doesn't seem like it's wise to just pay back the Treasury when that money could be going to actually reduce costs to the Treasury over time.
Okay, thank you. And Mr. Kaniewski, I know that you played a role in that as I think you said number 2 at FEMA. Thank you for that. Back to the mayor. We hear support. We've heard support from each of you for investments in mitigation. I want to talk about the barriers in smaller communities, not just Appalachia, but other places where they are more likely to have natural disasters of any kind. Talk about the barriers accessing federal resources and managing floodplains and other kinds of natural disaster preparation.
Thank you, Mr. Chair. As I had mentioned earlier, a lot of it has to do, the barriers become capacity. And some of the barriers become education. I look at my colleagues, not just across the state of Ohio, but across the nation, who come from small cities, villages, and a lot of them don't know where to turn to seek insurance funding. A lot of them don't know about the funding. It becomes capacity. So there's a disconnect, I think, in a lot of the smaller cities and villages. So that's of real concern to me. We were talking earlier, and thank you for your work on SSI and SSDI with Senator Cassidy, that our individuals who are living on fixed incomes, from a financial standpoint, especially as I've mentioned, I've said it 3 times now, being in a distressed county, where we have a lot of individuals living on significant, fixed incomes, helping them understand, how they can be able to access insurance, if at all possible. It becomes a real issue.
Thank you. Senator Cortez Masto from Nevada is recognized.
Thank you, Mr. Chairman. And thank you, all 3 of you, for this important discussion. I'm from Nevada. Flooding looks a little different in the desert, and I will tell you, we do have challenges with flooding from heavy rains, flash floods. I grew up with those in southern Nevada, new land development that changes the natural drainage, and really the spring thaw of winter snow. So the questions I have for you are kind of based on the inland challenges that we have for flooding. I guess my first question is, I know the Department of Homeland Security developed 17 legislative proposals to reform the NFIP. One of those was a recommendation that the agency, that FEMA, differentiate between coastal and inland locations when determining premium rates for policies. Mr. Heck, would you agree with that?
Thank you, Senator. To the degree that making that differentiation allows for better data, more granularity, and for people to have more appropriate coverage, yes.
Good. Does anybody disagree with that? I'd be curious. Okay, thank you. The next question, Dr. Kaniewski, let me ask you this. Unfortunately, we're seeing a lot of wildfires now in the West, and that literally has an impact after the fire on the geography. And when a big rain comes, then we see horrific flooding after the fire. So I guess my question to you is has the NFIP made any changes to maps or policies in response to devastating fires? Because this is my concern, BLM, this is local ranchers. We all have this concern that there's a challenge after a fire that we don't get mitigation dollars for, we aren't able to address, when actually that's probably the worst flooding that can occur.
I agree with you that this is a risk that many aren't aware of. And unfortunately, it adds additional pain and suffering. After one disaster, it creates another. So yes, it makes a lot of sense to mitigate that flood risk, whether it be before or certainly after that fire, to prevent anything like a landslide or any other kind of devastating effect. It affects, obviously, all of the living organisms, including those that could prevent, the grass and such that could prevent future wildfires. So it's really a disaster onto another disaster.
Yeah, and that's something I'm hopeful that we try to address at many levels, because it is devastating throughout the West, and anybody that has these devastating wildfires, there has to be remediation afterwards, appropriate remediation. Mayor, thank you for being here. Really appreciate it. One of the challenges in Nevada is affordable housing, and I suspect it's a challenge of yours as well. I'm curious, what are some strategies that you're dealing with to enable affordable housing developments to actually remain operational when insurance costs increase by 20% or more?
It's a national problem. I think we all recognize that. It's certainly an issue that the National League of Cities has taken up. and working through in earnest. You know, one of the things that I have been working really hard on is there are levers that a mayor can pull to help with with affordable housing being developed. We can use things like you know, tax increment and financing for neighborhood revitalization, which is basically a 75-10, 75% capture of the new valuation with having houses that are either renovated or new housing that goes in over the course of 10 years, and use that money to help pay for the infrastructure that has to go in place to support those new homes, whether it's new street surface or new street period, water, sewer, storm. We've been using that to some effect in the city of Athens. There's also some programs that I know that we're helping with some developers who want to build more affordable housing with the single-family housing tax credit that we're encouraging them to use to build more housing. And then the other thing that we've been looking at, and there's a challenge here as well, is looking at LIHTC housing within our community. We're fortunate that we were able to get 2 9% LIHTC projects that created 192 workforce housing units. The unfortunate with that is that we were told that there was a 4% LIHTC that was going to create 36 senior housing units in the city of Athens. And unfortunately, the gap was too large for that developer to come in and cover that gap. They did come to the city and ask if we had $1.5 million in our bankrolls somewhere to be able to fill that gap. If I had it, I'd certainly consider it, of course, predicated upon city council, but it's those gaps that become a real challenge. There's a lot of different financial gaps that we're experiencing when it comes to affordable housing, but you know, we're working through and doing the best that we can.
Yeah, and I think that's what I hear in my community. That's the biggest challenge. And that's why I have to thank the chairman, because this is an issue. There's legislation, and his focus is on how we address the affordable housing crisis in this country. One of them is addressing LIHTC. There's other ways that we can figure out how we help cobble together the financing to keep the costs low. There's legislation that he is supporting and introduced, and I think we need to get it done. This is not a partisan issue. This is bipartisan. We should be focused on how we address communities like yours, homeowners, individuals, renters, the like, to have a roof over their head, and it's affordable, and they can keep it. Thank you.
Thank you, Senator Cortez Masto. Mayor, I liked how you said predicated on city council. Well said. As the only elected, we don't have a lot of elected officials at this table. I mean, last week we had Jelly Roll, who is decidedly not an elected official, but anyway, thank you. This was a very good hearing, and thanks for the wise, reflective, illuminating way that you explained this very, very complicated issue that this body for years and years has not been able to work its way through. And as Senator Cortez Masto said, it's certainly not a partisan issue. There are almost half this committee represents a coastal state. And deals with these, but so does Nevada deal with them, so does Ohio deal with them, so do other states. Thanks for being here. For senators who wish to submit questions, for the record, they're due 1 week from today, Thursday, February 1st. To the witnesses, you have 45 days to respond to any questions. Thank you. The hearing's adjourned.